you as well, Rajesh. And Rajesh, let me come to you. This one is coming from Vijaya Kirti, who's writing to us from Tamil Nadu. Wants to know about Concor. About 400 shares of Concor our viewer has in the portfolio at a price of about 1,060 rupees per share. Wants to know whether to hold, sell or average. What's your take coming in on Concor? Sharp downtick from the elevated price. I'm not sure if there's a price adjustment in this one or stock adjustment in this one, but what's your take? Stay put with this one?
Good morning, Cheryl. Good morning, Ankita. Good morning, Kunal. And as far as Concor is concerned, I think it's a strong company, one of the best play in the logistics sector, if you say so. But they have railways, the wagon things, and doing very well. Even the railway land royalty business has been taken care of in the recent past. The correction is just because of the fact that railway stocks and all these stocks has run up quite a lot in the last 2-3 years, and that's why we have seen the massive correction in the market, not only in the entire market, but specifically in stocks connected with railways and defense. Concor being one of the best play in logistics space, there were talks of sometimes back of disinvestment being taken place, but that has been put on back burner. But sooner or later that will happen. When that will happen is difficult to say. But fundamentally, it's a very strong stock. At these levels of around 650 odd levels, I think one can even add to that.
All right, that's the word coming in on Concor. But moving on from there, this one's Krishna, who's writing from Chennai. He says that how long should he be holding Cipla? He has 20 shares of Cipla. And he wants to know if he should be exiting at this point, and he wants to know at what levels can he get into Maruti. Kunal, you take this one.
Well, I think you can hold on to Cipla over the short to medium term also at current levels of 1500. There seems to be a good base formation which is formed for Cipla. The stock has stagnated at this 100 odd point mark, 1400 to 1500 range, but it looks like the stock could now start to inch up higher. So I would suggest a hold. For Maruti, on the other hand, I still believe that there could be a bit of more consolidation which could be at play for Maruti. I think what you need to look out for signs is that the auto pack in overall starts to outperform the benchmark indices. I think only then I would believe that stocks like Maruti can start to outperform. Yes, the stock looks attractive on the long-term charts, but then I would probably believe that maybe above the 12,000 mark could be a better comforting point for Maruti over the short to medium term.
This one's coming from Ekam Baraya, who's writing to us from Hyderabad. Kunal, let me come right back to you. Wants to know whether can buy CG Power at current price for a period of about 6 months or so?
Well, you can. In fact, on a short-term basis, CG Power looks attractive for a potential target of 700. The stock forming an inverted head and shoulder pattern on the daily charts. So I think on that context, you can look to buy. But then in this kind of a trade, I would also suggest that you keep a stop loss or maybe a support point at play for the stock. That I believe could be closer to 580, 585 for CG Power.
All right, Rajesh, I'll come to you for this one now. This is Sudha writing. She says that she wants advice on Triveni Turbine, Chambal Fertilizers, Gravita, and JSW Energy. She wants to know how long should she be invested in this, and is this the right time to get into these names?
See, out of the four names, I think it's only JSW Energy which is in a better footing rather out of the other three. The company is doing well, huge capacity. The only problem is coal side, but that has been taken care of as per the management commentary in the last quarter. The numbers have been decent, and the valuation after the kind of correction which we have witnessed in the last 3-4 months has been massive. So at around 520, 530 odd level, JSW Energy is the better bet than the other stocks which have been mentioned.
Next query, I will ask Kunal to guess. Do you know which stock the query will be on, Kunal?
ITC.
Wow, bang on. I am sure even Rajesh also must have guessed it. This is from Shreyas. He's writing to us from Bangalore. He has ITC. He's bought this at about 428, 500 shares of ITC. Is it good for the short term or not? Let me not ask you first. Rajesh, what's your take? Is it good for the short term, long term, all terms?
You're asking me?
Yes. ITC, what's your take?
You know my answer. It's always a buy. It's a buy at these levels. Very good for long term. Company has been doing very well. Strong balance sheet, debt free, cash positive. FMCG has been growing. They're moving into dairy and other products. I think so. One of the best stock to hold in a long term portfolio.
undeterred, not moved away from that sort of conviction coming in for ITC for the last at least 3 years, Kunal, now? Yeah. 3 years, right?
More
I
than
think
3
we
years,
spoke about this in 2022 or 2023. 2022, I think so, is when we spoke about it, because that's when the tide turned for the stock. So, Kunal, now what's your view?
It's still very much the same, and I'll echo with what Rajesh also said. I think it's a strong buy from a long-term play. We've seen ITC now, coming back into a zone of an outperformance. So, in this last 2-3 quarters, where you've seen FMCG stocks falling by 30%, 40%, ITC has been one stock which has fallen far less as compared to many of the other peers. So, I believe that in that context also the stock stands to be one of the stronger names from the pack. I would continue to be bullish on the stock from a long-term play.
All right, moving on then from ITC, coming to you then. Rajesh, tell us, this one's by Siddharth from Kolkata. He has 52 shares of AU Small Finance Bank that he's bought at 632 rupees. He wants to know about the outlook for the long term. If he wants to hold it for the long term, should he be holding the stock?
See, I think in the entire small finance banking space, this is one of the best stocks. Very conservative management, very strong hold on their asset quality, doing very well. And they have expanded very well, especially in the Rajasthan and these areas. I think it's a buy at these levels.
All right, so that's the take coming on AU Small Finance Bank. On that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query. Viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's just mark the flash on the bottom of your screen. You have the LIC CEO speaking at an event where he's saying that there are discussions in the final stage to buy stake in a health insurance company. So that's the take or the statement coming in from the LIC CEO, saying that they are in final discussion or to buy stake in the health insurance company, but not looking to buy a majority stake is what they're stating. So that's some sort of a commentary or clarification coming in. They're also saying that they're hopeful that before March end, some decision on the stake acquisition will be made. So watch out for LIC on that particular development. For now, the stock is actually seeing an uptick as we speak. A clarification coming in that they're looking to buy a stake in a health insurance company, but yes, not looking at a majority stake buy, and also they're hopeful of some decision before March end will be made with regards to this sort of an acquisition. So watch out for LIC on that particular note. But let's talk about the other queries that we have, and we have Kunal as well as Rajesh taking all of his stock related queries. This one, Kunal, I've got from Ramu. He's, I think it's from CC Ramu. He's from Bangalore. L&T 100 shares at a price of 3,168 rupees per share. He wants to know when will it reach its peak that it had reached a short while ago of about 3,600 rupees per share. 37 is the peak actually. But what's your take on this one? For how long should he wait?
Yeah, I think the all-time high for the stock is around 39.50, 60 thereabouts. It'll take some time to reach there, but I think it's a quality stock like L&T. You've purchased at a very good price, I think 31.50 thereabouts. For L&T, which is again a stock which has come back towards its multi-month lows, if not multi-year lows for L&T. I think a 20% correction generally is what we consider as a good zone for large cap names, and especially the low beta stocks like L&T as very good zones for long-term traders to try and enter into the stock. So I would suggest to hold on to the stock. Now, difficult to anticipate when would the stock come back to that 3750 plus mark or 3900 plus mark, but I believe eventually over the next couple of years, you would probably expect that L&T behaves in the manner in which the indices also perform. So if the index moves up higher, we come back to the life high levels, say in the next few quarters, then I believe L&T could also mimic the same.
All right, moving on from L&T, coming to you, Rajesh. This one's Ron, who's writing from Mumbai. He wants a fundamental view on the long-term holdings for Sonata Software and Swin Pharma. Rajesh, this one's for you, and he also wants to know the exit point for the same from Kunal. So first we'll come to Rajesh perhaps for the fundamental long view, and then the exit points to Kunal.
See, as far as Sonata Software is concerned, is one of the good companies in mid-cap space. But the problem right now is the entire IT space is under dark clouds, I would say, because of the kind of Trump policies which has been announced almost every day. So at this point of time, I would say it's better to switch to some large cap IT names like IT, Infosys or TCS. Somebody wants to be in IT. As far as Suven is concerned, one can continue for a long-term holding. One can even buy at these levels. It has corrected quite a lot, despite the fact that the numbers has been decent and they have quite a good ANDA filings and all doing well. So, Suven is a buy from side. Sonata is a switch to large cap names.
Right. Kunal, what about you? Any exit price for this? Because I'm not sure if our viewer is already holding on to this, but I'm guessing he's holding if he's asking for exit price.
Yeah, I think we should hold on to the stocks, both of them. Now I understand that both of these stocks have gone through a correction, but the interesting bit about the charts, for example, for Sonata Software, the stock is almost at a 30 to 40% below its long-term averages. Now, yes, a pain point is what the stock is going through in terms of its phase, but I believe at current levels of 350 thereabouts, there is a very strong likelihood that the stock may start into a mean reversion phenomena sooner or later. And when that happens, you might probably expect the stock to come back towards at least 450 to 500 kind of a zone. That could be a point where you may look to maybe reconsider your decision whether you're looking to book profits or not.
Right. Deepak Dave has written from Gandhinagar. Long-term investor wants to add Raymond's in his portfolio. He already has about 50 shares of Raymond at a price of around 1,650 rupees per share. What's your take, Rajesh? Do you think it makes sense?
Yes, of course, one can buy. Strong brand, doing very well. Last quarter numbers were very decent. They have good expansion plans. One can add at this levels.
Moving on from there, Kunal, this one's for you. This one's Dean Sequeira, who's writing from Goa. Kunal, he wants to know if it's okay to buy Tata Motors now for 1 or 2 year time span at the current levels that Tata Motors is trading at.
Well, it could be a good buy at current levels. From a long-term play, I'm not sure whether 1 to 2 years could be a good time frame, but I think, yeah, if you're okay to extend this to maybe 3 to 5 years, then I believe that there's a very strong likelihood that the stock may start to get back into a zone of an uptrend, because we've seen a 40 to 50% correction broadly for Tata Motors from 1150, 70 thereabouts towards 600 mark. The stock formed a low for itself. So I think in that kind of a time frame, as well as a correction, I would believe that the stock would be a good buy at current levels.
All right, so that's the take coming in on Tata Motors. Let me take this next query coming from Mr. Singh, who's a senior citizen from Pune. He has SRF, about 200 shares at a price of 2,500 rupees per share. He wants to know what's your take on the fundamentals for this particular counter. Actually, Rajesh, given the fact SRF also, imagine it is actually bucking with the overall market weakness in the last 3 months. It's up about 32%. And also, let's not forget, this is a specialty chemical play. A lot of factors actually drive this entire segment as well, one being China plus one strategy as well.
It's a strong chemical play, no doubt in that. One of the largest in the sector, I would say. Doing very well. They have a huge product profile, not only chemicals, but other things also. And the numbers have been decent. Strong company. If you have a long-term horizon, by long-term I mean 12 to 18 months, you can continue to hold. And by any chance it falls by around 10% from the current market price, one can even add.
All right, coming to you, Rajesh, yet again, because this one's for the long and fundamental view. This one's Bharat, who's writing from Trichur. He wants to know which one out of these 3 names is better to hold for the longer term perspective. And he's speaking about 5 years and more. BDL, BEML, and BHEL. He wants to know the levels at which he can buy, and perhaps which one is the better bet.
BEL, BEML, and BDL, right?
Yeah.
Out of all 3 are defense related stocks doing almost good. I would say the order book is good, doing very well, and seen massive correction in the last 6 months or so. So it's a difficult choice, because when defense starts moving up, almost everything will move. But if I have to choose one out of these 3, I will go for BEML. This is not only a defense play, but also into mining and metro coaches. Doing very well. The order book is very strong. Management has clearly stated that they expect the order book to grow very fast in the near future. Product profile is good, and all the 3 industries, be it metro, mining, or defense, are doing well. So BEML would be my choice from out of these 3.
Right. Coming to you, Kunal, from this one's from Subramaniam. He's writing to us from Chennai, and he is an ardent follower of yours because he said that he wants to know about AB Capital, 40 shares of 100 at 199 rupees per share, and he's mentioned that it's a favorite of Shri Kunal as well. So he wants to know now, should he look to average, and what sort of a short-term target should he keep in mind?
Yeah, I think it could be a good zone to average the stock at current levels of 160 thereabouts for AB Capital, because again, couple of technical factors playing out. One, that the stock is at a divergence of almost 20%, 25% from its 200 DMA. That's a good zone to enter into the stock on a contra perspective. The second, the most important part is that the NBFC sector overall has started to look very attractive. We've seen stocks like Bajaj Finance, Finserv, Shriram Finance, Chola Finance, etc. They've started to look very attractive, and now we could be probably going to a zone where the underperforming stocks in the very recent charts, the likes of L&T Finance, AB Capital, etc., they would start to get back into a zone of breakout. So I think in that context, these stocks, especially AB Capital, could be a good buy as well as an average at current levels.
All right, with that, it's time for a quick breather. After the breather, we will come back and take all your queries, but stay tuned, we'll be right back. Welcome back. You're tuned in to Buy Now Sell Now, where we're taking your queries and getting them answered by the experts. You can write into us on the numbers that is flashing on top of your screen. Let's get going with the queries then. Rajesh, I'll come to you for this one. This is Thomas George, who's writing from Kochi. He says he holds 500 shares of Indus Towers. He's bought at 350 rupees, and 2,000 shares of NLC, he's bought that at 215 rupees per share. He wants to know the future for these particular counters. I'm assuming he's not written a time frame for this, but from a long-term perspective, what is your take on these counters?
See, for long term, I think both are very strong companies. Taking one by one, Indus Towers are doing very well. The tower business is doing well. They had some holding issues that has been recently solved, and with the kind of 5G rollout and all, I think the business is going to do well. We have a target of around 370 odd rupees in Indus Tower for the next 1 year. One can continue with that target. As far as NLC is concerned, huge capacity, doing very well in the lignite mining. Power is doing very well. They give very good dividends. So I think NLC is better out of these two. Indus Tower is also good, but out of these two, NLC is better for a long-term holding, especially because of the kind of dividend it doles out and the kind of fundamental it has. So both are a hold at this point of time.
All right, both are a hold at this point in time, but NLC India definitely looks much better than Indus Towers is what Rajesh has to say. Let me take this next one coming in from Umesh Gupta from Vadodara. Kunal, 150 shares of Cummins India with purchase long back at an average price of 2,444 rupees per share. He wants to know whether he should add more in his portfolio. Luckily, he is sitting in the profit.
Well, yeah, and I think the stock at current levels looks reasonably attractive. I think it's forming a good rounding base at current levels, which means that the stock could be in for a breakout. That breakout level for Cummins India is around the 3,000, 3,020 mark on the spot levels, and I think whenever that happens, I would actually expect the stock can move towards even 3,500 over the very near term. So yes, you can look to average the stock at current levels and position yourself for a potential breakout closer to 3,300 to 3,500 mark.
All right, Kunal, this one's again for you. This one's Jay Krishnan is writing from Kerala. He wants to know at what levels can he enter Coforge for the medium term. Well, Coforge is, Kunal, one of the counters that has really bucked the trend. In fact, it has outperformed the IT index. At these levels, is this the right time to get into Coforge?
Well, as I was pointing out earlier also, that I expect that the large cap IT stocks or the IT index overall can go into a struggling phase over the next few quarters. But then there could be exceptions over there. Coforge, of course, is one of the stronger names which has done reasonably well in 2023-24. But my only catch is that keep your position size a bit restricted onto these IT names, because you are in the midst of a downtrend on the fear side. There could be a chance that these stocks may go into a bounce back mode, or they could provide that rally. But then if the larger trend for these stocks is still on the downside, then you could probably expect that maybe post the process of a bounce or a rally, these stocks may go into a further leg of correction. So keep your position size under check. But yes, Coforge could be an interesting bet.
Right. This one is coming in from Manoj. He's writing to us from Tamil Nadu. He purchased Indusind Bank at around 1,500 rupees per share, about 200 shares of this one. Rajesh, the stock definitely has seen a downtick, and it is seen that sort of a downtick on a fundamental basis. Given the fact the news flow was not supportive for Indusind Bank, what should he do? Should he hold on till the stock recovers, or should he actually sell in loss in order to safeguard his capital? And I'm sure it's not just Manoj who is thinking about this. There will be a lot of them who actually invested in Indusind Bank, or there would be someone who's taken this opportunity to go ahead and load up the stock. What's your take on the fundamental basis? Anything to get too perturbed about Indusind Bank?
See, the point is, at this point of time, maintaining a status quo, whatever has happened. I think at these levels, it's a strong buy. But the problem is you never know whether there are more problems coming up. Because once when there are problems started coming up about corporate governance or some derivative losses which has been reported in a less number. So these things, if these things are one time, then it's okay. It's a good buy. But you never know what kind of things would be there in future, or RBI is going to put some restriction, or SEBI is going to come out with some prediction on this. So it's a very risky bet, I would say. If I have to talk of fundamentals at this point of time, it's a strong buy because of the fact that it's trading below book value. Even if I give 1.2 times book value, that's adjusted price to book. So that comes to around 1200. That's almost 100% jump from here. So this is a high risk, high return kind of bet. Any investor which is having a high risk appetite can buy at these levels, provided he has a high risk bet. What I would suggest is go for only 4-5% of your portfolio size in this, because as I said, there may be some more worms coming out of the can. So only for those who can look at take risk is a buy from our side. Somebody holding can continue to hold. There might be a bounce back because of the kind of cut which we have seen, and at this point of time, one can hold.
Already purchased, Manoj, and since you are sitting on it, for now what Rajesh is of the view is yes, hold. We don't know what lies ahead given the fact that what sort of a news flow we are likely to see when it comes to Indusind Bank. But if you're already holding at your elevated levels, his advice would be hold and don't actually book out on loss to safeguard capital. Right, Rajesh?
Yes, I would definitely agree.
So it's a buy in case you're a new, and if you have the high risk appetite, then it's a buy call coming in on the fundamental basis. Similar signals actually flashing for you on the screen as well, Kunal, when you talk about Indusind Bank. Is buy?
See, it's a buy in terms of the price, but news flow keeps on deteriorating for stocks, and that could keep the stock a lot more busy, maybe in terms of a downtrend. For example, on the short-term charts, the reason why Indusind Bank has been struggling in the last 2-3 days is because the stock is in the F&O band. So these technicalities, they keep on coming for stock prices, and which could impede the the near-term trend for stocks like Indusind Bank. But I largely believe that levels around the 600 to 700 range where the stock is trading right now, at least on the longer-term charts, are very attractive buys.
All right, so that's an attractive buy. In fact, let's actually hear out about what LIC CEO had to say exclusively to ET Now. We did talk about the health insurance first. Let's hear him out.
In life insurance industry. So according to you, what are the reasons and what more can be done so overall penetration can also increase in insurance sector?
Actually, for penetration, 4 things are required: affordability, accessibility, availability, and all those things required. But at present, we have to do a lot of study, because to make a product affordable, because many people, they think insurance is costly. So for them, a lot of study is to be done. And today, I am happy that this global conference of actuaries, they will deliberate on all the issues which the industry is grappling today. In my speech, you must have observed, I industry, and these people will address all those issues.
So as the largest insurer, I mean, so you spoke about under-penetration.
Yes.
Can you throw some light as to how you will go about achieving penetration?
You see, there are areas in which many of the industry players are not entering. There are certain areas which actually we should focus more and more those areas, and those population segment who need insurance most, not to just move here and there in all urban city, tier 1, tier 2 cities, and compete with each other. Then only more than penetration, I will emphasize on coverage. Because India is a big country, large population, maximum insurance coverage should be there so that almost every insurable person is insured. That should be the objective.
So while this is true, there is also a issue of cross-selling of insurance among by banking, and so how do you sort of balance this and that?
No, see, going forward, all this, at one time everything will be integrated. Financial solution person, when customer goes, he will expect under one roof he gets all financial solutions. So there is nothing wrong in that.
और सर अभी आपने जैसे स्टेज पर बोला कि डेटा का बहुत हम सही इस्तेमाल करेंगे वेरेबल डिवाइसेस व्हीकल्स का, तो क्या एलआईसी ऐसे प्रोडक्ट लेकर आएगा जब जनरल इंश्योरेंस
देखिए एलआईसी अभी देखिए अभी जो है एलआईसी अभी तक हम लाइफ इंश्योरेंस में है और हेल्थ इंश्योरेंस प्रोडक्ट बेचते हैं, डिफाइंड बेनिफिट प्रोडक्ट, नॉट इंडेमनिटी प्रोडक्ट. तो वो अभी वो सब जो है वो तो अलग दूसरा इंश्योरेंस है.
जनरल इंश्योरेंस में उतरेंगे ऐसे प्रोडक्ट्स प्लान?
नहीं हम उतरेंगे, कौन बोला हम उतरेंगे? अभी तो हम तो कोई ऐसा डिसीजन नहीं लिया है. हेल्थ इंश्योरेंस डेफिनेटली वी आर प्रपोजल डिस्कशन इज गोइंग ऑन एट फाइनल स्टेज. So and that is a natural choice for LIC to be in health insurance.
That will be a majority stake, and when you
That once we finalize very shortly, I think all things will be worked out. Within this financial year, because regulatory.
So that's the LIC CEO talking about that flash that we were putting out a short while ago. They're saying that they're planning to enter the health insurance space, but the discussion is in the final stage. They're targeting the decision in the health insurance plans to be made before March 31st, but they are also saying that they will not hold a majority stake in the proposed health insurance venture. So that was the LIC CEO talking about that. The stock definitely has risen from those initial commentaries, now trading higher by about 1% or so. But with that, I'd like to thank Kunal as well as Rajesh for being part of the show, for answering all the stock-related queries. Though it was truncated, we tried and squeezed in as many as possible. And hopefully, Kunal, the rest of the day also stays as cute as it has been in the last 1 hour trading session. I will speak to you in the closing trades and we will talk about that at 2:30 p.m. But on that note, we slip into a break on this edition of Why Now Sell Now. When we come back, more lined up on the other side. Don't go anywhere.